All right, welcome back. This is the Something Venture podcast. I am Kent Lindstrom. I am your host. My guest today is Chris Douvos. How are you doing?
Hey, just living the dream. How about you?
All right, this is good. Get right in there. Like, make sure you sound really good. By the way, I have on my notes Sammy Hagar and Drywall are in here.
Okay.
So if we just hit those two tent posts during this podcast,
okay.
See, now nobody's tuning out.
Sammy Hagar and Drywall,
yeah.
Got it.
So I will try to describe what you do. And actually, so the way Sammy Hagar says he writes music is that he listens to other people's music. He gets it wrong, but then those lyrics are the lyrics he uses. So if I get this wrong, you can let me know. But basically in this world, there's maybe fewer than 10,000 people who have the job of being a venture capitalist.
Right.
There's another group of people behind them, though, who are professionals who invest only in venture capital firms. And why somebody would need to supply capital to a venture capital firm is that there are these big institutions around the world, pensions, endowments, et cetera, and they need to invest in venture capital. But they're in places like Boston or Chicago or New York. So they come to a professional like Chris who takes their money, bundles it up, and invests in venture capitalists. In the world, there may be 10,000 people in venture capital. If there's 50 people doing what you do, I would be surprised. He founded his own company called Ahoy. How did I do?
That sounds good. I'll tell you what, people ask me all the time, they're like, wow, that job seems really cool. Like, how do I find a job like this? And I'm like, wow, it's like you actually probably from a percentage basis have a better chance of becoming an astronaut than finding your way into the LP world. And then actually what always cracks me up is you get these venture capitalists who are like, oh, I've been a venture capitalist for X number of years. I know how to do, investing. I'm going to go, when I retire, I'm going to go work at Alma Mater.
Yeah.
And, and run their private equity portfolio. And I'm like, it's a little bit of a different game. And by the way, like, you guys in the venture capital business are just buying a portfolio of options. We're actually like, building a well-rounded whole out of a bunch of jagged pieces in a portfolio. So it's kind of interesting work. I kind of stumbled into it and, I didn't even know such a job existed.
And it's one of those jobs you just kind of can't get there from here if I understand it correctly.
Yeah.
How do you get to it? So first of all, I realize you started your life at Phillips Andover Academy.
Oh my God.
That's like Dead Poet Society stuff, right?
Don't make me sound my barbaric yop. I could do that.
Did you end up standing on a desk?
Oh, all the time. I mean, I had to seriously, shake my white locks at the runaway sun. Like, don't make me quote Walt Whitman.
That's a pretty impressive educational background you have.
I was a cab driver's son from Brooklyn. Like,
really?
So
how do you end up at Phillips? That's actually kind of...
This is actually, do you have like a minute for a story?
Yeah, what the hell?
So my middle school in Brooklyn was like just a freaking zoo. Like it was 8,000 kids crammed into a building that was supposed to house 1,000. Like obviously I'm exaggerating, but poor urban school in Brooklyn. And this guy came. His name was Jim Ventry, and he was an admissions officer, and he was like a year out of college. And he got this short straw, so he had to go around and actually pitch this thing called the Rockwell Scholars, which is a program funded by Mr. Rockwell of Rockwell Aerospace, who basically was like, look, I want to find 5 kids each year from inner cities and give them full scholarships. And part of it was this outreach program. So Ventry goes around and he sleeps on alumni couches, and he comes to Junior High School 142 in Brooklyn, which is right off the BQE. It's that big red behemoth, which many of you have driven the BQE might recognize. And he tells this story of like this place, and he puts up slides and alums, and you're just like, oh my God, this place is like a fantasy land. And I go home and I tell my parents about it, and my dad says, my son, in America, there is a system. And your
dad was in the mob.
Yeah, my dad's a big fat Greek guy, and so there is a system. And if you're part of the system, the door is open to you. And so this place sounds like part of the system. I want you to apply. And so my dad always says these things like, "My son, where you're going, I've been." Like all these immigrant, portentous immigrant phrases. Anyhow, short story long. I end up applying. I get in, go on a full scholarship, changes my life, opens up all these doors. But when I show up on campus, I want to say thank you to Jim Ventry. Like I'm really grateful that he came to my school and all that stuff. He's gone. He went to law school. Yeah. Fast forward 25 years, I never got to say thank you. It's always been like this hole in my soul that I never got to say thank you to Jim. And I finally get a call from Peter Curry, who former CFO of Netscape, on the board of Facebook, consigliere to Mark, all this stuff. And he's an alum. He was chairman of our trustees. He goes, "Hey, Douvos, you tell a good story. So like, why don't you come to this this admitted students event at the Olympic Club? Just tell a little bit about your experience and your trajectory and all that stuff." I'm like, "Oh yeah, that'd be fun." He's like, "Co-sponsor it with me." I'm like, "Sure." So my name's up on the masthead with Peter Curry's, and I show up at the Olympic Club, and who's giving out name tags but Jim Ventry? And I go, "Jim Ventry, were you around like 25 years ago?" He goes, "Yeah, I was in admissions for a couple of years, but I had a career in the law. And then I decided that, admissions was my true love." I go, "Why is that?" He goes, "Because I saw the chance to change people's lives."
Yeah.
And I go, "Well, have I got a story for you?" I said, 25 years, I've been waiting 25 years to say thank you to you for coming to junior high school 142 in Brooklyn. And here I am 25 years later, co-sponsoring an event with Peter Curry at the Olympic Club in San Francisco. Wow. God bless this great country of ours. And it's all because of you. So thanks, man. And he got all choked up and goosebumpy.
Oh, man.
People give me the side eye about the whole Andover and Yale thing, but I'm just like a cab driver's kid from Brooklyn.
I just think it's funny because I went to La Jolla High School, and then I went to Northwestern for college, and people would show up from the East Coast, and they'd be like, "I went to Choate," and stand there like I was supposed to know what it was. I know it now. I get it. They're super cool schools where elites go. So then you go to Yale, and you major in history, thinking you're going to get in on the sort of sweet history money, I guess.
Oh yeah.
What's the plan here? Like, you're making your way toward it, but
well, look, I got to tell you, I wanted to major in history because I had read the Preppy Handbook by Lisa Birnbach. I don't know if you ever saw that.
Yeah.
And it said the more useless your major is, the more respect you'll get at the country club. And I'm like, oh, cab driver son from Brooklyn. I want to live this life. I want to find the most useless major. And sadly, I went to an art history class, my first class, and that class was completely full. So, I had to go for the second most useless major, which was history. Actually, I joke because history is the study of continuity and change.
Yeah.
And it's actually really important to be able to, some of the stuff we learn about contextualizing people, places, and things in kind of a narrative actually turn out to be pretty important. And I always joke, the phrase history comes from Herodotus, who wrote the histories, and in Greek the word history means walking around and talking and experiencing, right?
Yeah.
And so Herodotus, if you read the histories, the first historical work, he's, saying things like, "And then I was in the land of the Lydians, and here are their stories, A, B, and C. And then I went to the land of the, Olynthians, and and blah, blah." He gives you the,
right.
And I was like, wow, at some point, when I started working at Princeton, and we'll talk about that at some point, we used to do due diligence by running up and down Sand Hill Road, and we'd say, "Hey, Mike Moritz, who's good today?" Right?
Yeah.
You're just getting warmed over conventional wisdom. And I was like, wait a second. If I know anything, my history from history, studying history, it's that it's about primary sources. And who are our primary sources? They're the entrepreneurs, right? And so all of a sudden I'm like, hey, instead of going and wandering the lands of the Thracians and the Corinthians, I can go and wander among the Startupians.
Yeah.
And so that's how I started doing, the voodoo that I do, that, the kind of tradecraft.
Yeah.
And that all comes from being, having majored in something quasi useless.
That, when I went to MBA school, the professors kind of said, "Okay, you're 22, you're 23, whatever. You're going to learn a bunch of stuff here, and you're not going to have any idea what we're talking about. And then 10 years later, you're going to go, oh, that's what that was."
Right.
And probably there's part of that. You go to Yale, you study history, you're like, I don't know, power struggles between whatever. And then probably 10 years later, you go, oh, that's
right?
why that guy killed that, or whatever, what the heck was going on.
Right. Well, it all reveals itself, right? And I'll tell you, in business school, it's almost cliche. The organizational behavior professor is always like, this stuff's going to be really important, 20 years down the road. And you're always like, this class is stupid. Yeah. And then all of a sudden you're like, wow, this stuff, organizational dynamics are actually really crazy important.
Yeah.
Right? Especially in in startup world where, the fragility of these, precious, companies is really high compared to established businesses that have, EBITDA engines that are cranking away. And I always talk about, when you, in a classic asset management framework, you think about, people talk about risk adjusted return. You talk about like the expected return and volatility of a stock, right? That's how you blah, blah. And I always thought it's funny that we put venture capital on these matrices of risk and return, because like the metric of risk, volatility, like it makes no sense in the concept of, the context of venture, where, first of all, the companies are like marked at whatever price for the next 18 or 24 months until they get remarked. What the real risks are not only things like technology risk or, product market fit risk, or, it's like risk that like the VP of sales is gonna sleep with somebody in the VP of engineering, which this happened in a startup that I know of, and both quit, and all of a sudden 2 months later the company's dead. Right? That's risk. Like, don't talk to me about like volatility and standard deviation, blah blah blah.
It's crazy. We're here at Founders Den, and obviously I won't name the company, but we can overhear people talking. And some of these companies they're just lovely, and at lunch they play with whatever Catalan of cards or whatever the hell Dungeons and Dragons is now.
Right.
They play that. But there was this one company where every time the CTO or the CEO would walk away, the other would start bad-mouthing the other one.
Right.
And we're like, they raised $3 million and they might have spent, might as well spent that money on hookers and blow, because there is no way that VC is ever getting that money back with those two guys bad-mouthing each other.
Right. It's amazing how... And so, all this organizational behavior stuff like actually turns out to be pretty darn important.
Yeah. So if you're motivated by entrepreneurs, which motivated me too. Like for me, it was people like Gates and Steve Jobs and those. Like you want to work with them, but how do you come to that? You're 2 levels up in like this crazy, literally ivory tower, because it is. Yeah. How'd you get from the history major to the numbers?
Well, it's crazy because like when I started like chasing entrepreneurs to get like, data, it was actually really awesome because it was like 2001, 2002 when I started when I started doing this. And this place was such a ghost town in those days. Like venture was like the naughty child of, the portfolios, and even the best funds were down 20% quarter after quarter after quarter. And you're just like, wow, that's, we're asymptoting to like a 0.2x. Right. And so, people are really receptive, but I feel that generally, like if you're part of what I love about venture and what I love about the Bay Area particularly, that's actually almost uniquely true in the world, I think here, is how open the social graph is, right? Like I do feel like in other places, it's, you're not 2 phone calls away from anybody. Yeah. You're 5 or 6 phone calls away, and somebody along the way road might even shut you down for whatever reason. And I always felt like that was like so amazing how, open and welcoming, the community here was. And I think that's still true. But it was particularly true in 2002. And like entrepreneurs love talking about their companies. You show up with a case of beer on a Friday at 4:00 and you can sit there for the next 3 hours and get, all the shop talk. And so I used to just like try to network to folks. Like the way a lot of people in my seat do this is, they ask GPs for introductions, they ask the VCs for introductions to the entrepreneurs. But then, there's a political angle to it. So I love picking people out of, like the alumni mag and, entrepreneur to entrepreneur relationships or referrals were great. And all of a sudden you could get like, amazing, insights that you couldn't get anywhere else. So like one of my first conversations, and I know you just had Hornick on the podcast, and he's awesome, right? Like fantastic guy. And he's an investor in a company called Video Egg. Yeah. And I was out here talking to Matt Sanchez and the team, the founders, and this is like 2003 maybe. And we're talking, I'm like, so tell me why you assembled the syndicate, right? First Round was an investor. August was an investor. I think Mavron was in there. There are a few guys in there. And I said, tell me about what you liked about each of these. And he goes, Josh and Howard at First Round are amazing. They brought this kind of insight, blah, blah, blah. Whoever, at Mavron, I think, they have a tie to Howard Schultz. He came in and swooped in and said some interesting stuff. And then August was amazing because we went to Hornick's house and Pamela cooked us an amazing dinner. His wife, Pamela. Yeah. Now, I've gotten to know those guys. They're awesome people, but I think that I'm not impugning anybody because I think she would say the same. that may be the last time that Pamela's actually cooked.
Yeah.
But I'm sure she's actually a fine cook, and she's going to put a foot in my behind right now. But, but literally, like, these guys are like, yeah, we had this amazing meal that Pamela cooked, and as a result, we let David into our round. I'm like, wow, that's how things work here. It's kind of wild.
Geography is destiny. It's it's funny having David on the podcast. We talked a bit about the lobby, which is the conference he created. And I talked to some people before the podcast. Go, hey, what should I talk about? The genuine affection people have for the lobby is pretty great. And he was kind of surprised. He seemed kind of more surprised than I would imagine to hear it. Like, people were like really, really happy, like really just have a place in their heart for him for having created the connections he has.
He's like an impresario. Yeah. And what's funny is he's not a terrifically tall guy. Like, I don't, he's probably like 5'3". And one year he wore like the white suit, like the dude in Fantasy Island.
Fantasy Island, yeah.
Now, probably half the people who end up listening to this podcast, Fantasy Island was 20 years before they were born.
Look it up on YouTube.
Yeah, it's little like guy. And so I thought that was actually like hilarious, like self-awareness.
I think it's fabulous. So how did you recognize? Because I think I've come to see this over time that Silicon Valley is something special. Because if you go to startup hubs, I had somebody on from Startup Mexico, and they said, Mexico City, you have a startup, you don't tell anybody your idea, like anybody cares. You don't want other people to succeed. Right. Like here, you're like, yeah, that guy succeeded, cool, because maybe I invest, or maybe he lets me invest, or he invests more, like you kind of want other people to succeed. You don't want them to fail.
Yeah.
Other areas of the world, it's not exactly the same as here.
I think that part of what makes this area so interesting is the amount of in terms of magnitude and continuous nature of the failure, right? And you get, obviously you've got these mafias that come out of these great successes, but what's actually really interesting is the amount of churn of talented people that come in and out of things that don't work out, right? So it's almost like the self-refreshing pool. And somebody once said to me, in Silicon Valley, you're never up or down, you're always coming around.
Yeah.
And I thought that was actually like really interesting. I've always wondered, like, why isn't Seattle more, there's been some good companies that have come out of Seattle, obviously the behemoths, right? Yeah. But like, why doesn't Seattle have a more robust, tumultuous, startup scene? And I think it's because it's just too comfortable a place that's had too much success.
Oh, interesting.
Right. And like somebody once told me that Boise has more, I don't know if this is true or not.
But it's a podcast. It's all true.
It's all true. Exactly. Like, I used to be a tour guide in college, and like the Yale tour is like 96% true. Yeah. But the 4% that's like questionable is actually like all the awesome and entertaining stuff. So
you're like, Ben Franklin started a podcast here. Well known fact.
There's this story about how they led this cow up a tower, and cows can walk upstairs but not downstairs. Yeah. And so, then the punchline is that night they had beef in the dining halls, right? But for a few hours you could hear mooing all through New Haven, right? Right. Like, I don't know if that's true or not. Some guy probably made it up. Anyhow, but it's true now because it's in a podcast. Yeah. Anyhow, so a guy said to me, city with the most engineers per capita is Boise, Idaho. And so why isn't there a bigger startup in Boise? And I know some people have been trying to do stuff in the Intermountain West, but I think Micron is the big, company there. And like, they've been like chugging along, crushing it for, forever. Like, you're pretty like happy, right? Like, there's no, whereas here, you're at Silicon Graphics, that thing like blows up spectacularly, and kind of fizzle. And then there's like 1,000 people who've like got really good startup, kind of hyper growth training, and like, boom, they become a diaspora that like seeds the next thing. So I think people see that, and they see that like, they're like one founder fuck up from being, unemployed. And so, there's you might as well be nice to people because you never know.
It's funny. Ben Stein actually says, Ben Stein, like Bueller, but he's also an economist and a writer. He posits that the people in California are actually different. And what he says is, he says, think about the people who came to America and then stayed in New York. There was like some group that was like, this is fine, I'm done. Yeah. And then some group of people went further and further. And whoever was that group that went further and further ended up in California. There's literally nowhere else to go. So they go up into their minds, which is Hollywood to the south and then technology to the north. Yeah. So he's literally saying it's a different type of descendants. So it's sort of like there's a lot of really good looking people in LA, and maybe it's the weather and they exercise more, but over time, a lot of good-looking people go to LA to try their luck.
Yeah.
They don't become a movie star. They become a insurance person and have good-looking kids. Like, he literally posits that there's something about the attitude.
Well, look, I'll tell you, I think there is a psychograph. And by the way, I get a lot of flack from people because my portfolio is so Bay Area centric. Although what we found is, even though I invest in managers, we do direct investments in startups as well, but like most of my time is most of my dollars go to managers. And even though my number of managers has not, the percentage that are based here in the Bay Area has not changed, the composition of their underlying portfolios is changing. And we're seeing a lot more, kind of secondary tech hub, tertiary tech hub. And whereas in the past, a lot of those companies would get moved here, I think in some cases they're staying. And I've even heard that, some people are encouraging their companies to, kind of find a tertiary, kind of tech city with maybe a good university or something, and own that as like, their engineering center, right? And so, you got to hit them where they ain't. But the flip side is, I think there are a couple of things that are interesting about the Bay Area. You've got, in California particularly, more generally, you do have this kind of psychographic, this willingness to this utopian, Walt Whitman here. I can quote Whitman.
And you really get your money's worth out of that history education.
Holy smokes, right? I see in California the genius of the modern, the child of the real and the ideal, right? Like that's Walt Whitman in 1847, right? And I love that phrase, the genius of the modern, the child of the real and the ideal. And I think there is this kind of utopianness about, kind of what happens here in this endless sense of possibility. But as importantly, I think California has a structural advantage that people don't talk about a lot, and that's that non-competes are not enforceable here, right? And I know they've been trying to change that in Massachusetts, and they've been trying to change that in Washington State, but I think there are two states, and I want to say the other is Wyoming, but I'm not sure who it is. But that is crazy important, right? Because I know so many stories of people in Boston who leave startups or leave big companies to do startups and get jammed up for 6 months and have to like take the gardening leave or whatever. Right. And in startup time, that's half a lifetime, right? And so that friction, right, and that the people kind of moving past each other and the sparks that get created from that is can't be underestimated.
Yeah, I think there's also some audacity to California, and at least in Northern Cal. I guess Hollywood too. They do it, where you meet people, and the biggest thing is we invest in companies. Is we see companies, you see people, you're like, there's no chance, you're not zero. And then you see people like, I think you're going to build that company, and I think it's going to sell for sure for $40 million. Right. It's going to do exactly what you said. Yeah. But there's people here who just are like, they invent Uber. Yeah. Or they sit down and they say, I'm working on this thing. It's going to cure cancer if it works. Right. And you don't go, get the fuck out of my face. Like, this is ridiculous. You're like, probably not. Yeah. But that guy might cure cancer. Might. Yeah. That guy might change transportation for the entire planet. The entire hospitality industry might cease existing because of some dude. And that just becomes how you think. And so I think there's some freedom for some people to just create these things.
But, look, I do think this is a sunny and magical land, but I also worry about getting too complacent because there are a lot of issues, and cost obviously is one. I think, one of the things that I spend a lot of sleepless nights thinking about is immigration policy, right? Mm-hmm. And so much of what has been built and achieved in venture has been, inclusive of non-native born, Americans who are accepted into the broad lap of our alma mater, right? Like this is actually, here, more history major. Hector St. Jean de Crèvecoeur wrote in 1786, he asked this question, what then is this new man, this American? And he says, he is an immigrant who says, ubi panis, ibi patria, where there is bread, there is my country. It is the cry of all immigrants. He says, Americans are the Western pilgrims. They will close the circle that was started long ago in the East. And I actually feel like that circle closes in California. We can't take that for granted. We've got to continue focusing on what, as an aside, and sorry, we're kind of scattered, but like as an aside.
Nope, that's where all the fun stuff
That's where the fun starts. Like
nobody wants to hear the A is the new B or whatever the hell.
Yeah, exactly.
Nobody cares.
One of the things that I thought was most hilarious was when Jerry Brown was governor. Like which by the way, like, he had the whole Governor Moonbeam thing. You figured for sure he was a stoner, like, which he wasn't. But I thought it was hilarious that he was like vehemently against legalization of marijuana, vehemently. And I once heard him talking on a morning show, and he's like, "Look." And he does the Jerry Ryan. He's like, "Yeah, we're sitting here. We're in the middle of like a globally competitive economy, right? This is the 5th biggest economy in the world, and we can't have people walking around half stoned." And I'm like, "Yeah, you're kind of right, like." And then you walk down San Francisco, Market Street and everybody's half stoned. So hope maybe, or who knows, maybe they're microdosing LSD and their creativity is getting unlocked. I don't know.
I mean, the California guys have always, forgetting even the Silicon Valley stuff, Ronald Reagan, they knew what the immigrants were doing.
Right.
Like I grew up in San Diego. There's a border fence that is very lightly protected because everyone knows that the agricultural economy,
right,
the retail economy, at least for restaurants,
right,
runs on immigrants being able to pass across that border one way or another.
Right.
And so Silicon Valley, it's the same thing. Like, we know that that's part of the fuel.
Right.
And if everyone's going to end up in Vancouver, that's not going to be great for us.
You just gave me, as we used to say in Brooklyn, agita. I'm like stressed out now all of a sudden. Like, this is I worry about people, hardworking people who've been, kind of put off by the environment and are finding themselves in Vancouver or Toronto or Montreal or Paris or, wherever. It stresses me out.
I guess it's I guess the people who vote on it just must not have immigrants around. Because if you're anywhere in California, you're like, I don't want that guy to not do what he does. I don't want to do that. Yeah. Or I want that guy to do what he does and invent Google or whatever it is.
Yeah. I mean, imagine it's like, what's that Avengers movie called? Endgame, right? Yeah. Like the Thanos snap. Like, imagine if you snapped your fingers and all the immigrants disappeared.
Yeah.
Think about the effect on our nation, like as human beings, obviously. But then think about the effect on the innovation ecosystem. It would be insane. Yeah. Like, and so, we've got and that's, California is a very open, open place. And I think a very easy, immigrants have challenges. My parents were both immigrants and lived in Brooklyn in the 60s and 70s. And it was strangely a welcoming place. And I feel like for tech entrepreneurs, California is even more welcoming.
Yeah.
And I think that's important. We've got to maintain that.
How do you come? So you end up through whatever story, you end up at a company where you're going around to pension funds and you're saying to them, hey, you should give me, first working for somebody else before yourself, you should give me $25, $30, $50 million and I'm going to invest it in funds.
Yeah.
Why do they take your call? Like, why? Why
So, for better or worse, I don't really talk to pension funds. All of my investors are mid-sized endowments and foundations. And so what's interesting, actually, in terms of why, my constituency, I've been kind of bouncing around long enough that I've kind of got some good insights and, perspectives and can, help people, evaluate, what's going on here. And, my typical investor is kind of an $800 million to a $4 billion endowment or foundation. And they frequently have existing venture portfolios. And I'm helping them refine and rebuild their portfolios in a lot of cases. And so almost acting as a Sherpa, right, in the valley for them. And so it's great because, obviously, there's a knock on, the fund-to-fund space because we're middlemen in some sense, right? And middlemen, take a fee and we do some stuff to like align interests, and that's for another time. But ultimately, like, we have a university that every fund gives us, $10 million. And for them, it costs them $100,000 a year, like 1%. And actually that's our high water fee, like blended over the life, it's less, but at the high water mark, it's $100,000 a year. And to hire a venture person in a university, mind you, this is all knowable. You can go on the IRS Form 990s. At the bigger endowments, somebody like me is getting paid, seven figures. I'm not. But
I was going to say, you should go
I was going to say, I'm in the wrong business. But my jazz is not from getting paid. I'm lucky I get to, keep my lights on and feed my family. But my jazz is like being kind of this intelligent switch in the middle of a network. And that's what my investors value. And so it was interesting in the case of Data Collective, which was a fund that we backed in 2011.
Which has become hugely successful. So you backed them when they were a small fund, 10 millions, around there, and now they're managed more than $1 billion.
Yeah. We took a big swing for us in their 2011 fund, and we did a $7.5 million bite in a fund that was $77 million. Wow. And so, but what was interesting there is that a bunch of our investors piled in because I said, hey, this is like my great new idea of 2011 or 2012, whichever it was. So I introduced them around, and my investors did another $30 million in commitments to that fund. And so, we were, half the fund basically, which is awesome because it increases like our footprint with those guys. So Matt Akko, returns my calls.
Right.
And, but also my investors love it because that fund's been performing well. I've got a lot of reputational risk because there's been, I think at this point, like 2/3 of my investors have done investments in Data Collective, but it's certainly happened with other managers as well. So I love that. I love being a Sherpa. I love being a connector. That's my jazz. It makes me feel like I'm a small cog in this amazing place.
And I assume people are excited. So you had you were correct early on when you invested early, I think, in First Round Capital,
right?
Which is Josh Koppelman, and has just been an incredibly successful venture fund, both in terms of how much people respect it, how well they've actually done. Anecdotally, they actually did invest in Uber, like amazing.
Yeah. Well, look, I'll tell you, what was amazing was, so I, back to this living in the land of the startupians, I was in San Francisco in, kind of 2002, 2003, 2004, spending a lot of time here and down in Silicon Valley, probably obviously a lot more in Silicon Valley in those days. I just kept hearing about like what was coming in terms of lean startup. In fact, I'd say that that change in entrepreneurial finance is the biggest thing that's happened in venture in the last 30 years, right? The fact that the cost of starting a business has come so far down. Today it's probably the opportunity cost of unemployment, right, to get to first revenue. But Josh actually, he and I were sitting around. He said, look, my first company in 1993, it took me $7 million to get to first revenue. My second company took $700K. And my third company took $70K to get to first revenue. And then once you have revenue, you really lengthen your runway. And so I was like really starting to understand this, understanding, back then we were calling it utility computing. Today, AWS or what have you, just all of this stuff was changing the economics of entrepreneurial finance radically. And I thought like, man, if this stuff is true, our whole portfolio is wrong-footed, right? And so I ended up leaving Princeton because I got called by this guy, David Salem, who asked me to come to TIFF and invest heroically. He said, Chris, come and invest courageously. Wow. I was like, wow, that is a mandate.
That's the call you're waiting for.
Right. It was so awesome. I was like, join me and together we can rule the universe.
Right.
It was so awesome. And so at that time I was like, wow, I've got like, I can invest without fear of career risk. Right. And so I started, laying down some bets on some interesting managers. And Josh was like one of my, first calls. And I said, like, we sat down and we started talking through some of this stuff, and we started having lunch, kind of once a month at the West Conshohocken Marriott, right outside of Philadelphia, right where First Round is based. And at one point I looked at Josh and I said, hey, Josh, if you didn't exist, I'd have to invent you. Yeah. Like we had such a resonance and everything he was talking about in those days. Now this is like 2005 and 2006 in terms of platform and backing companies that can invest in response to growth, not in advance of growth, and how that changed the economics of venture. Like it blew my mind and I was like, wow, this is amazing. And so I invested in the 2007 Friends and Family Fund. I did 2 million of the 15. And then I introduced First Round to Yale and Princeton and Northwestern and University of Virginia and a couple others. So it ended up being like 85% of their capital in Fund 2 came from introductions that I made, which like was amazing, like that people actually listened to me in those days. And it was awesome, but it also set this model for how I wanted to interact with my investors now. But most importantly, like that fund ended up just, really blowing the door. So not, obviously Uber's in there. But then on top of that, you got, they had Square in there, Roblox, which is crushing it. Like, I think that's a 5X fund without Uber.
Yeah.
And then Uber's like another 20 turns on it, right? Like,
That's just crazy.
It's just an amazing, fund. They've done a great job, and they've really built that firm in a very thoughtful way, and built the footprint of the platform. It's been so rewarding to be, part of that journey.
Why, the narrative is that there was this sort of golden era of seed funds where there was like 2 or 3 people had it figured out. Josh was one of them.
Yeah.
And it was kind of just like a bunch of, whatever the metaphor is, blue space, empty space. I don't know.
Yeah.
It was theirs. It was all theirs. Why wasn't one of these funds then in everything? Like, why isn't there a seed fund that did Pinterest and Uber and Airbnb and like just all of them?
It's really funny because I know I won't name the fund because this conversation was in confidence, but there was a fund that met with all of those companies, right? And just did some of them, didn't do others, right? Like, and so it's funny that you say that because I was actually going to go a different direction with it. Like, that era was so amazing, and I'm thinking like 2007, 2008. Because I look back on it, I spent a lot of, cycles trying to figure out who's going to be the best here, and back the best. And so, it was like First Round and Floodgate and IA out of New York and OATV, and we did a bunch of good stuff. But looking back on it, like in that era, if you were in business in that era, you actually almost couldn't miss. Mm-hmm. It was actually an amazing and special time because I look back at like who was in the market in 07, 08, 09, and you the guys I just mentioned. Then you add in Felicis and Softtech, and you can go down this list, and literally you could have given any one of those guys money, and made money. Right. It's actually kind of unique, and today there are 900 of these firms according to Samir over at FRB, and it's like this chaos capital, and it's like, how are any of these people going to make money? And by the way, I love, like, literally I meet with 200 venture firms a year because I have an open door policy, which I'm thinking about ending because I'm just over it. Right. Because I feel like half the time I feel like I'm getting punked. Like people come in and they talk about the exact same companies that somebody did the prior week, and I'm like, is this a joke? Like, right. And so, but literally, like, one thing I've noticed is people start coming in and saying, like, I'm in 4 unicorns, or I'm in 2 unicorns, or whatever. Like, this is how people are defining victory now. And I'm like, first of all, like, don't give me your bullshit SoftBank valuation, right? Like, it is what it is. Second of all, like, wait, didn't you do like some stupid uncapped note? And so you like ended up, you were at like an early investor, but like when you converted, you're at like a $500 million, valuation. Come on. So you're sitting on a 2X in $1 billion company. Like, what, I'm exaggerating, but it's stuff like that. And we've gotten like really sloppy about the arithmetic of a venture, right? Like, and that's a whole nother soapbox to climb on. But there's just so many people, and they don't understand there's a thing called the fallacy of composition, right? The fallacy of composition is like, one way to describe it is if you're at a concert and you can't see, you stand up and you can see. But then once you stand up, everybody else starts standing up, and now you can't see again, right? Yeah. So everybody's in these deals, everybody's in these high value things, like, but until the moolah is in the coolah, it's all bullshit.
Yeah. Wow, there's your mob boss coming out again.
Exactly. Moolah and the coolah. Actually, when First Round did a distribution of Uber, they sent around Yetis with a First Round logo. And that is pretty funny. It's pretty awesome. That is the coolah for my moolah.
So I'll give you a controversial take. Okay. I'm just making this up.
Yeah.
That there's not enough VCs or not enough early stage VC money. And here's what, when I was with Jonathan Abrams, founded Friendster, Kleiner Perkins comes in, invents social networking, the big joke number that, oh man, this is going to be worth $1 billion. Ha ha, was like a joke.
Right.
But we said it, we're being bold. Yeah. It wasn't worth $1 billion. It wasn't worth $4 billion. It wasn't worth $40 billion. It was worth $400 billion. Yeah. There aren't 400, there isn't 400 times as much capital going into seed. Yeah. So all these like, I'm going to invest in Microsoft to go public at 400 million.
Right.
Isn't the money coming because people go, because this thing could be worth 400 billion.
Right. So, it's really interesting because this, what you're putting your finger on is this, the scale of the outcomes has changed so radically because the markets are so much bigger, and there's a whole bunch of reasons for that, which smarter people than I have, can opine on. Here's my question. Here's my pushback. I'm going to, as they say in law school, fight the hypo, right? Like, should there be more venture capitalists? Or there aren't enough venture capitalists? That's our hypothesis. I think that and I've had this debate with people where some people are like, look, entrepreneurship is an unlimited renewable resource, right? Like, and I do think compared to, I started doing this in 2001, so like almost 20 years, the world has changed radically in that there's so much more education out there. Like Brad Feld did more single-handedly in terms of blogging and writing and stuff like that, than had happened in the past. And I single out Brad because he's still so active and so great. He's such a swell guy. But like, than had happened in the past 30 years, prior, right? Like so the craft, this dark art has kind of propagated through the land, and the world is flatter. Although there's we can talk about that at length. And it's easier to become a venture capitalist. You can just read all these blog posts and get smart enough to be competent enough. But at the end of the day, the rate limiting step is what I call the exit sphincter, right? And I joke around, like I did this talk a few years ago at the NVCA annual meeting. You got like all these like stuffed shirts in the front row. Dixon Dahl is sitting there, and he's got his kind of 3-piece suit on. In my memory, what was awesome is Mark Andreessen was there, and he like got a giggle out of this because I put up a slide from Genius, Rap Genius, which they had just invested in. And I was describing the song Method Man by the Wu-Tang Clan. And I don't know if you're familiar with it, but the song, at the beginning of the song, they start like, they're doing this like duel of, who could do the worst, kind of torture to an enemy. So it's like, they start off there like, torture, motherfucker, torture. Yeah. And so they're like going back and forth. And finally, I think it's Old Dirty Bastard goes, yo, I'm going to sew your asshole shut, and I'm going to keep feeding you. And feeding you and feeding you and feeding you. And then the song starts, and I'm like, that's what it's like to be an LP, right? We just keep throwing money out there, and you guys are just like, are investing in companies and more companies. And then the next slide I put up at the meeting was I put up the Daily Wire from Dan Primack, and it was like deal, like 9 deals, and then exits, no IPOs, no M&A. Yeah. And I'm like, we're filling up this snake, right, with this pig that's not making its way out the back. There's an exit sphincter that's tight, right? And look, we've had some, good stuff go on in the public markets, but think about the number of companies that get funded every year, and think about the number of companies that get, exited. Yeah. And so if you add venture capitalists and you add capital, at the end of the day, the money has to, you have to have a greater fool to actually buy this shit, right? And so that's been my worry. Now, you do have, we have the exceptions that prove the rule, right? Actually, can I tell a story? Yeah. Okay. So I sat down in early 2008 with Mark and Ben. This is like for A16Z, number one. In fact,
so this is Mark Andreessen, Ben Horowitz of the hugely famous firm Andreessen Horowitz.
That's right. Yeah. And they were, they're raising their fund one, and what's funny is, Josh Koppelman had given them some money, because they had, put together a list of like 100 people, who, thought leaders in VC who gave them money, and Josh gave them some money, and they said, hey, can we get an intro to some of your LPs? And Josh said, sure, here's my LPs. Who do you want? And this is like one of my career highlights. They're like, well, we want an intro to Yale, and then the guy who writes the blog. And back then I was like blogging pretty actively. So I was like, oh, so I called it when I heard that. I called up my buddies at Yale, and I'm like, hey, you guys are in the big time now, getting mentioned in the same breath as me. And they just hung up. They said, fuck off.
That's fantastic.
But anyhow, so what's funny is I had this huge back and forth and couldn't get anything scheduled with Mark and Ben. And finally I was talking to Brad Garlinghouse, and he was like, well, if you can't get something scheduled, they have breakfast every day at Mike's on Middlefield. And so I write back and I go, hey, we can't get this on the calendar. So I'm just going to meet you at Mike's on Middlefield at 9:30, Thursday morning, bring a slide deck. And I get an email back from Ben. He goes, okay, you win. We'll meet. Wow. And so, anyhow, we met at the offices of Ning. And this is actually the funny and interesting story, and shows, kind of my, the feebleness of my own mind. But I'm sitting there and I'm kind of skeptical, and I kind of had this hypothesis after a while. I'm like, it feels to me like you guys are doing this for the greater glory of Mark and Ben, right? I'm not convinced that this is like an LP investable, thing. And I said, and I said that to Mark.
Wow.
And he said, I respect that, but give me some data. And I go, hey, look, let's talk about arithmetic, right? Here we are, we're sitting in the offices of Ning, and remember, Ning was a high flyer. And I said, you guys just participated in that round, and that was a $770 million valuation for a company that I knew was doing less than $10 million run rate. I said, look, that has to be $1.5 billion exit for you guys to get a 2x, right? Yeah. And by the time then you take your fees, I'm getting like a high ones return, which, by the way, I can get all day long investing in stable cash flowing businesses on the buyout side. Why should I bother with this? And another data point, like we're sitting across the street from Facebook. This is when they were like, kind of scattered throughout downtown Palo Alto still. I said, Facebook, you guys just participated in that $15 billion round. That has to be a $30 billion company for you guys to get your 2x.
Yeah.
And Mark just starts laughing. And he goes, Chris, you just don't get it. And I'm like, what do you mean? He goes, and then he starts whispering, and I kind of lean in. And he goes, when you think of Ning, you need to think of it as the company that's going to take down Facebook. And when you think of Facebook, you need to think of it as the company that takes down Google. And then he sits back in his chair and like rubs his belly and just goes, yes. And I'm like, whoa, we're in the valley now, baby. We're disrupting disruptors. Like, it's on. Yeah. I get out into the cold bracing, air of Hamilton Avenue in Palo Alto, and I just go, what was that? I was like, I'm in the reality distortion. I'm like, that's so stupid. Well, Ning ended up selling for some trivial amount. But you know what? Facebook is Facebook. Yeah. Right. And so I was like, actually, like, what's the phrase? Like, exactly right and precisely wrong, or vice versa. Right? Right. You know what? Like, they had a vision, right? And I think I forget what the question was. I don't know. It's just
fascinating.
Yeah.
Somebody should track down what happened to Google. I bet they did. Okay.
I think they did okay. Right? Yeah. So anyhow, it is interesting that I don't know what the question
isn't the massive amount of. I mean, this other issue that's happening that people don't seem to really notice. There's half as many public company stocks as there were not that long ago.
Oh, it is.
And so doesn't that force even more? All the money seems to be being made, whether it's right or wrong, in this Series A to Series D world. Now, maybe the Series D can't turn into Moolah and the Kula.
Right, but it's funny that you use the phrase all this money is being made. All this money is being put on paper.
Well, that's true.
Right?
Yeah.
And this is actually a big, huge problem in my world because a lot of people have like late cycle fatigue, right? Like if you're an average university endowment and you're building your portfolio to have a certain target allocation, and meanwhile funds are coming back faster, getting bigger, you're making bigger commitments. Oh, and by the way, the NAVs are ballooning, right? You're going to be above your target. So I think, structurally, a lot of LPs are above their target. And, at some point the money could start, the faucet might start getting turned off and, trickling, to a dribble.
Yeah. Well, let me ask you this before I have a couple more things before we go. What is with VCs and math? Like I have never, you never hear a bond trader go just make crazy stuff up about how to do a duration or something. But I had a VC, like VCs will say like, well, if you own 5% of a company that exits for $100 million, that doesn't return a $25 million fund, which is literally saying $5 million is less than $25 million. Or diversification, you're more likely to get a unicorn if you invest in 30 companies. But you should invest in 90 because then you're 3 times more likely.
We should start a Twitter account, VC Map.
It's astonishing to me. Like it's like, yeah, that would be true if like it's like as soon as anything's multivariate, they just lose it.
Not
all. You can make fun of VCs on the podcast, by the way, because they all assume you're talking about someone else.
Exactly. It's funny because I remember when Princeton, we would have to pitch in the Monday meeting our ideas, and you go and you pitch a venture fund. And there was a guy who shall remain unnamed, who is my predecessor, and we used to joke that he had this like shake that he would do, like kind of like almost like like a lounge lizard, like sidling up to like an attractive female, and he'd kind of like shake his shoulders and be like, "Hey, it's about the team. It's a team." Like, and you're like, and you push back and you'd be like, "Wait, how do we incorporate this in like the broader risk-adjusted return, framework of the fund?" He's like, "No, but it's the team."
Oh, man.
Right. And that's the kind of like slippery justification that gives venture, a bad word. It's like we use lottery slogans with Ivy League veneer, right? Like we say optionality, but what we really mean is, hey, you got to be in it to win it, right? Yeah. And so, what I'd say about that is like, and then VCs do themselves no. But I sat in on a Monday meeting once, and this guy literally said, so what should we mark? It was like kind of towards the end of the year, and they were like talking about the portfolio. He's like, what should we mark that company at? And somebody says, well, we did around at 200 post, like 12 months ago. He's like, all right, so let's call it 220.
Wow.
And I'm like, wow, you just created $20 million in value. Just like, hey, yeah, sure, whatever.
You should take the rest of the day off.
Yeah, exactly. You need a towel for that sweat on your brow?
Yeah.
So look, there's this kind of crazy slipperiness, and I've pushed a lot of people really hard to think about their portfolio construction, because that's where you can think about some of the arithmetic and how it that's where the rubber meets the road. But ultimately, without the cash coming out the back end of the exit sphincter, if we just keep marking these things up, to your point, sorry, that's the archives going back to your point. The accounting firm Grant Thornton wrote this thing a few years ago called the Great Delisting Machine, and they talked about how there were, like you said, half the number of public stocks. And so, there's the new listing, there's certainly appetite for new listings, but it's certainly not crazy appetite. And secondly, with everything that's going on in the techlash and, or whatever Reid Hoffman's calling it, with all the scrutiny, I wonder if the usual suspects who acquire, all these high flying companies, if they're going to start getting more cautious, or if they're going to, people, theoretically it should help, 1,000 flowers bloom, right? A little antitrust activity, but I think it's also really dangerous.
So is the party over? I mean, the narrative is that we've had this huge run. It's been 10 years of just valuations going up. Is the party over in terms of, one, just venture capital being I can't imagine being a good asset class, or in terms of people actually creating genuine global $100 billion value companies?
Well, look, I'm a perpetual optimist, right? So I think there are a whole bunch of areas, the perennial gales of creative destruction, blow. And so, we're seeing a lot of interesting startups. We've spent the last 10 years disrupting the offline economy. I actually am really interested in a friend of mine, Dave Fleck, down at Caltech. He's doing a fund down there. He talks about CS plus, right? Like computer science plus X, CS plus X. And we're seeing some amazing stuff going on in computational biology. We've got a couple of computational physics startups that are doing some really interesting stuff, right? There's a lot going on where, and if you think about it just on the computational biology front, Steve Jurvetson once said this, blew my mind back in 2003. He goes, life is code, right? The AGCT sequence of the, of the gene of DNA, that's code, and we can hack code. And can we do that to kind of improve people's lives and outcomes and this and that? That's an interesting question. The question I think we don't struggle with at all, we kind of just punt on, is what's the old phrase? The future's already here. It's just not evenly distributed. There's a lot of stuff that's that's going to go on. That's going to be where there are going to be opportunities for people to improve their lives if they pay, right? And the cost of these things is getting kind of greater and greater. So that's a whole nother story, but that's above my pay grade.
Well, you don't sound like somebody who thinks that the party is completely going to end. But what do you make of, when Josh Koppelman and First Round, those companies came around, there were a few companies because a few had been formed. Do you think we'll end up with a few companies now because hundreds will be destroyed in terms of venture capital firms, or just people they don't get destroyed. People just get done with it. And
they just it's really funny because having been around as long as I have, I feel like a dinosaur sometimes. But you also see how things happen in the past, right? And so looking back to 2001, 2, 3, there was a kind of a 3-year stretch where there was tough sledding. Now, I'll tell you, on the one hand, during that era, I got a real appreciation for just how hard it is to kill a venture firm. Right, that long-term lockup capital, and is it makes this a pretty darn good work if you can get it. And I remember Doug Leone said to me in like 2004, he goes, if this downturn had lasted like 1 or 2 more years, we might have actually gotten like a shakeout of the the business. And so it was interesting to see some people went away, some people called in rich, the business shrank, but not by as much as I thought it would. Now, people have prognosticating what's the size of the business, and I say, look, they're going to be, people can do what they want, right? But Charlie Ellis once said to me, he said, look, if you think about the world economy, it's an ocean, right? You dump a bucket in there, it doesn't make a big difference. If you think about the public markets, right, that's a pool. You dump a bucket in there, it's not a big deal. As you think about private equity, it's a bathtub, right? You dump a bucket in there, some will trickle out. Venture capital is a toilet bowl. I don't know if he was trying to get the, but he said if you dump a bucket in there, it'll overflow. And I think that's what we've seen with SoftBank. They changed the tempo, and and I think, by the way, A16Z kind of changed the tempo before them, and they just out A16Zs. They just out A16Zs. And there's this great line from Fitzgerald where he says, the tempo of the city had changed sharply and the restlessness approached hysteria. That's definitely something that we see. But anyhow, long story short, I don't know. We'll see. I think there's amazing innovation going on out there. I think they're great entrepreneurs. I think entrepreneurship has become a really important force in the economy, and more so than it has in the past. And I think that we'll continue to see great outcomes. It's just a question of how much money goes in. The return on any asset is a function of the price you pay and the capital it consumes. And so that equation has to work for the people like me who fund that stuff. Yeah. Right. And if it stops working, the funding is going to dry up. Yeah. Right. That's the problem.
All right. Well, I can't do better than VC being a toilet bowl. That's fabulous.
Charlie Ellis for the win.
So how do people, I know you don't want them to get in touch because you meet enough firms, but how do people follow your thinking and you?
So, I actually used to blog quite a bit. So the blog is still up, Super LP. I've been thinking about writing, but I feel like we live in a 280 character world. And so a lot of people don't read as much as they used to, and it's also really hard to write. But people can check out the stuff there. There's a lot of, what's great about blogging though is there's a record of what you believe. So I wrote things in 2011 that I still send around, which is pretty awesome. And then I'm on Twitter at cdouvos, CDOUVOS. It's Twitter's a little bit more fun. I try to poke people every now and again and mix it up a little bit. And then I do have, for funds and stuff, I do have an open door policy. So you can find me through one of those ways. And then if you make your way down to Palo Alto, I'm more than willing to listen.
Meet you at your breakfast place.
Exactly, the creamery.
All right. Well, thank you so much for doing this. My guest has been Chris Douvos. This is the Something Investor Podcast. I appreciate this.
It was good fun. Thank you.
Talk to you guys next time.